What's up, Banter fam? It's your host, Miles here. Today, I am kicking off a very new, exciting series where we get some of the biggest guests and the smartest minds throughout the world of crypto and interview them in a long style format. Today, I have Jordi Alexander, one of the smartest minds in crypto. How are you today, Jordi?
I'm good, Miles. Good to be here.
I must say, I'm very happy to have you here. Ever since we met, I've been really looking forward to getting to grill you on some of the biggest topics in crypto at the moment. So I'm really excited to have a chat to you.
Yeah, absolutely. After all the FTX debacle, it's good to get back to like the real topics and not just worrying about our balances getting stolen.
Exactly. So I guess in today's episode, there's a few big topics we want to touch on. So firstly, obviously Selini Capital, a bit about your background. I want to ask you about Bitcoin versus Ethereum, the top altcoins you're looking out for in 2023, why you're not the biggest fan of perp DEXs such as GMX, where the VCs are investing for next cycle, the future of layer ones and how to navigate the bear market and much more. It's actually a lot of topics. We have a lot to cover. And a lot of very interesting stuff to discuss today. So I'm excited.
Let's get into it.
Let's jump straight into it. So basically, just tell the audience who's Jordi. Tell us a little bit about yourself and what you do.
Yeah, I would say the closest I describe myself as a game theorist because I love to think about these sort of like dynamics. Game theory is really trying to explain to the world about what happens when you have a lot of individuals together in a situation and they're all acting on their own personal payout function, what's best for them, and how does that interact with like a whole community or a whole crypto space or a whole trading environment, whatever it may be. It has so many applications in life, and it's something that I've been thinking about for, I guess, decades now. My background is sort of in games. I played a lot of games in a very serious caliber. I play like international level chess, bridge. I was decent at some of the other ones like Go, and definitely I was a professional poker player. So that was one that I went down really deep into. I did professional poker for quite some years in my 20s. So out of that, I guess I got into trading, use a lot of the same skill set, a lot of the same mindset tools. And after trading, which I still do, also started getting into like the fundamentals, because at the end of the day, I'm a very curious person. I just love to absorb knowledge and read, and I never get bored. I just kind of go deep into things and like to think through them. I'm a very curious learner. So at this point, crypto has gotten my attention for the last years, and I love to think about, what the future is going to bring.
I must say, I think the audience is in for a treat today because I think you've got some of the strongest and most informative alpha in crypto. I think we're going to have some very, very interesting discussions today. So I'm looking forward to hearing your answers on some of the questions that I introduced before. So basically, could you explain to the audience, you did touch on game theory a little bit. What is game theory and what got you first interested in it?
Yeah, I mean, the way to think about it is coordination. So if there's a group of people, if you can make them act the same way at the same time, maybe you can get like a really good outcome. Because, a society, for example, we're all doing different things. We're using our time doing different jobs. Everybody has a different job. And if we can coordinate, we can really use our skills collectively to do, a chain of products or a chain of services. And it's a really good economy. And on the other hand, if you have like a really bad coordination, nobody's doing the right job, and you have some central government, for example, that's just paying people to do stupid things or just sit around in an office all day and do nothing, things just kind of break down. So game theory explains when and why the incentives. It's all about like incentives, like what kind of incentives will create a really amazing community for everybody and a great future, and what kind of incentives make people kind of go against each other or act in a very selfish way. And if you start to control the incentives, it's all about incentives, because the incentives will coordinate or will destruct the whole. So it's a very powerful thing. It underlies everything about our lives and everything that happens.
How do you apply it? How do you apply it exactly to crypto? I'm assuming it's helped you vastly in your crypto journey. What's your mindset when you are applying game theory logic into the crypto market?
Yeah, I mean, two different ways. So like one is just the fundamentals. one of the main things is I understood early on that crypto can be very PvP and very negative, or it can also be like very collaborative, and people can create this trustless technology to coordinate in a really great way and achieve things together. Um, I've tried to always be a voice in the space towards more positive collaboration, and trying to create costs. What it means, like costs, is if someone is a bad actor, they're doing something very selfish. That, let's say, like the rug pulling, they're doing like some scams, right? Um, you have to create a cost. Like there has to be a social cost to them, whether it's like reputation or whatever. Because if there's no like police to arrest them, you have to create a disincentive to promote like good actions and good actors. And then conversely, if someone does really something good, you should compensate them. So there is a problem because it doesn't happen automatically. Like one of the great like educators in crypto, which is Antonopoulos, who taught so many people about Bitcoin and like how the technology works with Ethereum. He grew the space massively, but then he was like broke, right? He had like no money, even though he had to sell his Bitcoin for rent, and such a good actor. And then on the other hand, you have some scammers that will make like millions of dollars just by, putting fake links and stuff like that. So I use game theory to try to think about the incentives and how to align like the positive growth for everybody.
Nice, and I really like some of your threads on game theory that you've been writing. I think some of them are really great, and it's kind of a great insight into your brain, and it's a unique perspective because I don't see that many people in the industry really talking about it. But before that, you were obviously a very successful poker player. Tell me a little bit about your kind of poker days. What kind of takeaways did you take out of poker that kind of shaped you into the trader you are today?
Yeah, I mean, my poker days started with just no professionalism and just talent, which is actually not unrare. I would say um, half the poker players are just very smart, good at games, but they don't have any sense of, organization, keeping track of your results, and being organized in terms of what game should I play, where's my edge, and they just play. This is like, okay, this is my cards. I have ace queen. I'm gonna re-raise in the spot. So I started along that line, and it was totally fine before the age of simulations and computers, because you could just outthink people and win. Over the years, I saw that some people were being very systematic about it and really learning how to go deep, do like simulations, computer analysis, and play things in a much more formal way. So I would say that seeing that and deciding to go with that flow is what's made me successful later on in life as well. The people that I know from 20 years ago that kind of stuck with just relying on their talent didn't do as well. They kind of they fell behind the age of computers and the age of AI.
So did you end up playing at a high level? What was your like greatest achievements
I,
in the poker space?
I played at a high level. I was playing the highest stakes online on mixed cash games. So there was like a 400, 800 blind game on PokerStars that I would play. Very tough game. Should not have been playing in it, given that there's very few fish in that game. But I like to challenge myself. And I think long term, even though it might have been better for me to play softer games in terms of like hourly rate, I could maybe make more money just playing against weaker opponents. But challenging myself and playing against the very best in the world created enough of a long-lasting experience and really understanding what it takes to be the best at something, that I've carried that through like my entire life. And just being around these people, like this, if you're around like the literally best players in the world, you just pick up ideas and ways of thinking, and you're like, wow, I never expected to see that. Like, let me think through this. And you get these crazy insights that you would never get if you're just playing against soft people.
Do you think that do you think that experience is kind of what led you into founding Selini? That kind of the lessons that you learned playing poker, did that kind of contribute to the origins of Selini Capital?
Sort of. I mean, if you decide to start something, and whether it's like a startup or a fund or whatever it is, you have to be ready for all the kind of biz dev and all the random stuff that you have to do and solve all these problems. So I would say that's more of an entrepreneurial bug that either people have or don't have. It helped me in the sense of it led me to get a good grasp of what it takes to be like the best in the world at something and be able to succeed, regardless of what field you're in. You understand the dedication and the focus that it takes.
And just in case some of the audience doesn't know, what exactly does Selini do?
So Selini, at the core, we're a trading firm. We have a lot of technology, like prop technology. So we're technology focused as well. We have a lot of developers building a lot of cool tech, and we do a lot of algorithmic trading. So we can do a lot of market making, high frequency stuff. We really focus on the details. So like SLN Capital is our prop firm. We do a lot of market making for all the exchanges and DeFi exchanges as well. And we have a ventures fund that's starting in Q1 that's going to be focused on decentralized exchanges, which is something that we probably understand more than anybody else in the space.
I'm excited to talk about that later. That's going to be a good talking point.
Absolutely. And we also have a multi-strat. We've done different things like yield farming and stuff like that, which, now it's harder to do yield farming than it was a year ago where there was such larger capacity. So we look at more event-based strategies for that, like a bit more discretionary, a bit more event-based, diversified strategies.
So it's been a pretty crazy year. Like, obviously, we had the Luna collapse, then we had 3AC going down off the back of it, then BlockFi, Celsius, now FTX. How's the year been for business overall at Selini?
It's mixed. I would say overall, it's been a good year. We're happy to be alive. I know there's a lot of corpses out there. A lot of people haven't made it through the bear market push. So in a way, we're in a better spot than we were ever because we're still expanding and we're still doing well. And that's not true for many people. On the other hand, we understand it's going to be a little bit of a bear market, at least for the next 6 months. So volumes are lower, like volatility for now is still okay. We're still seeing volatility, which is good. So we're still fine. It's possible that volatility might die out. We're a little bit worried about Q1, Q2, if things get quiet. But overall, we're just happy that we definitely avoided anything to do with like Luna or Celsius or those things.
Were you actually one of the advocates speaking out against Luna before the collapse, right? On Twitter, you expressed a lot of your concerns, and I'm sure you were met with some backlash from the Luna army at the time.
I was. Although I did a debate against one of the Delphi guys who was supporting Luna, and to their credit, I think they acknowledged some of the points that I brought up, and even though Quan, I think he was kind of respectful and like acknowledging that there were some things to look at. And I think he was trying to fix some of the issues before, unfortunately, like things blew up. So I would say it wasn't that bad. They were respectful. They understood that I wasn't just kind of shit posting. It was like a deeper thought argument. We were actually farming UST, and I was public about it. I said this thing is problematic. While it's going, we'll still be in the game because we know when to exit. Like as soon as it depegged like even 20 bips, we just got out at like 99.8. I think we were like the second person out. Like as soon as the first person hit, we were just instantly out because I was like looking out for that moment. Because you can always get back in. It's like you have to think about things in options. You have like a free option. You might lose some yield and you might lose 20 bips by like exiting at a worse price. But if things settle back down, you can get back in. So in a way, like if the yield was 20%, you might lose like a week of yield just to be safe. And unfortunately, like it never recovered. Like once it depegged to 99.8, it was just one way down.
Were you short when it ended up depegging?
We shorted mainly on Luna because it was a better risk reward to short Luna than UST. UST, we shorted a couple times because it was bouncing back up to 90 cents. It would go up down to 60. And then I guess because they were trying to refill the reserves a few times, it would bounce up back to 90. And we did short 90 cents a few times, but then we would just get back out at 60. So we didn't short anything down to zero. We were just kind of playing the range.
And on a personal note, obviously, like from a business perspective, it's been an insane year. And for most traders, it has been like a crazy year with crazy volatility. On a personal level, how have you found the ups and downs of the year? What have your biggest learnings been, I guess?
I mean, the amount of learning that has been available for people who are just watching closely is enormous. Like, I feel like I know so much more than I did a year ago, both about trading and about kind of the fundamental designs and about, the rails of crypto, even like the macro environment. I've gotten so much knowledge about how the market reacts in different scenarios, because we've had scenarios that never appeared in like my lifetime, things that have happened since the 70s. So just experiencing some of these inflationary environments, and I think going forward, having the knowledge of what happens, when inflation spikes, and what assets to look for, what assets to sell during those environments is going to be super valuable going forward.
So let's kind of rewind back to the beginning, back to the kind of beginning of your crypto journey. When did you first buy Bitcoin, and how were you first introduced to buying crypto?
I heard about Bitcoin briefly on the trading desk in 2013. There was like a Bloomberg story. I think it was like $100 at the time. And I read the story and I kind of dismissed it because, I know you can't just make money out of thin air. So you can't just create, currency and think it's money.
FTX thinks you can.
Yeah. I made the mistake of just ignoring it. I didn't hear about it again for 3 years. I heard about it then in 2016 because I was living in the Bay Area, and being in San Francisco is probably the only place in the world that it was like mainstream conversation with people to talk about crypto. I think it was the only place in the world. So I had friends and acquaintances that started like some of the very, very first crypto hedge funds out there. And I would hear about it, and they got so excited one day when it went to 1,000. And
Just
I was
like
like,
2016
man,
or 2015?
yeah, 2016.
Yeah.
2016. Yeah.
Nice.
And I just thought like, okay, this is overpriced, but I need to obviously pay attention. So actually, the first thing I bought was Ethereum. It was maybe like $80 or something. And I just thought, maybe the big one is a bit too big, but Ethereum seems to be decently priced there. So I bought a bunch of Ethereum and I ignored Bitcoin at the time. And Bitcoin just kept going up. It was mainly like a Bitcoin-led rally. So Ethereum, I think it got stuck at $200 for a long time. It was just stuck at 200 while Bitcoin just kept going.
Yeah,
and I remember
it was kind of in that range.
Yes, it was definitely stuck quite low. Yeah, that's around when I bought it, maybe at 80. And I remember Bitcoin going to 2K and then 3K, and I just couldn't fathom what was happening. All my friends were like celebrating that had invested. And then in the end, there was a pullback.
You were just in.
I was not in. I was not in. But I bought a pullback finally. Like there was a pullback. I remember there was quite a correction. Maybe went back 40% at some point. So I bought some, maybe like 1,000, between 1,000 and 2,000. And Coinbase was like the only game in town for Americans at the time, and they only offered Litecoin and maybe like Ripple at some point. Like those were the only options. There was nothing else.
Oh wow!
So I guess like I was one of the first people that picked up on the thesis of the small, that retail would go for like small monetary amounts, that they would like to buy something cheap because they would consider it cheap even though there's more coins. So the small price thesis played out very, very nicely. I bought a lot of Litecoin at like $15, and it just spiked to 375 after a few months. I think that was the local top.
I'm assuming you're not still holding.
No, I'm not a huge believer in Litecoin. I would say the Litecoin thesis was interesting. It's definitely wrong in my eyes. Like it's completely proven that there is no need for a silver to Bitcoin. I think the idea was you have like 4 times the transaction limit, 4 times the speed, and 4 times the coins. So for everyday transactions, people would use Litecoin instead of Bitcoin and then convert it back, and there would be some sort of conversion rate. But in the end, people don't use it that way at all. If they want to send money, they'll use like USDT or USDC or something. So I think Litecoin has become a testing ground for Bitcoin. It's sort of like a beta, like a test net, where they can do like some mimble wimble, they can try some privacy stuff, and then if it works, they can move it onto Bitcoin. But I'm not sure that there's a value apart from it being a test net.
You did a very interesting tweet about kind of Bitcoin's current security model, and you said that you think we need to talk about it's potentially improving it now rather than later. Could you tell me a bit more about this theory and what your kind of thinking is behind that?
Yeah, so the great thing about Bitcoin is the decentralization and the security and the censorship resistance. But how we're getting that is we're paying the miners. Like the miners are getting paid coins, and they're distributed around the world, and they use energy in a way that people can't just copy it and mimic it. So that's kind of that's at the core of the network, right? Now, the way that Satoshi designed it is that there's a halving. Everybody knows the halving every 4 years. But now we're getting to the point where the block rewards are really starting to decrease. I think, we're going to go from like 6.25 Bitcoin to like 3 to like 1 point something Bitcoin per block. And at some point, if the price can't keep up, the dollar amount that's being paid for miners to incentivize them really goes down a lot. And I think if we don't talk about it, we might end up in a situation where we're unprepared and we don't know what to do, where miners have to just start switching off. I mean, they're already in a bad economic situation right now, and the mining rewards are still pretty high right now. So you can imagine.
Off, then doesn't Bitcoin become easier to mine because of the difficulty adjustment? So theoretically, that should entice new miners to mine Bitcoin.
Yeah, but if you think about it, like if somebody wants to interfere and either do like a 51% attack or just kind of create havoc on the block creating process, it becomes not too expensive for them, because like you said, it gets easier and easier to mine blocks, and so somebody can just spend $1 billion and just completely start interfering with the network. Now, there's people who will say that it's not the end of the world because the nodes can still figure out what like real blocks are, and if anybody does a double spend, they'll be able to pick it up and go back. But it really will slow down the ability to get any confirmations done, and in my eyes, it will just make the whole network look like a piece of junk, right? Because like you might take days to get like a transaction through. So we shouldn't take it lightly. Like even if the nodes can go back and find the right state, we have to have a functioning network in order to have credibility.
So what do you think the solution is then?
So there's only 3 possible solutions. One is optimistic, and it says that the trading fees, the fees from users using it are going to increase a lot, maybe from like Lightning or other L2s checking back in and like paying fees. So there's people optimistic that Satoshi's original vision, which is that the trading fees would pay the miners, maybe still has a chance. It's not looking likely. Like the direction is every month and every year that goes by, there's less and less paid for transaction fees. And I'm not sure if like L2s are going to solve that. So while that's possible, it's unlikely, and we should prepare for the more probable scenario, which is that the transaction fees are not going to be enough. So that's one solution. Another solution, people talk about like, there's going to be some altruistic entities that just mine it just to support the world. sort of like NGOs or something that will just do it for goodwill. Again, from a game theory perspective, it's hard to imagine that that's reliable. Like, where's the money going to come from, and why would somebody do it for everybody else when they're not the only
Could the government
ones?
do it? Maybe that I mean, if they're interested in stacking Bitcoin behind the scenes, they could.
But that kind of goes against the whole thesis of Bitcoin as being
Yeah, no, it does
an
completely.
alternative.
I agree. I completely, but you know, you never know.
Yeah, and then the third option, which is the one that I'm starting to advocate, is changing the 21 million cap, which is it's
Okay.
an emotional subject, and this is why I think we need to start talking about it now, because it's going to take people some time to think about it and process it and understand why it's not as scary as it looks. Because I understand there's a lot of Bitcoin maxis, or whatever you want to call them, orthodox people, Bitcoin orthodoxers, that will push back very heavily against any change towards the 20 million cap. So my idea is we just get to tail emissions, which other prominent people are starting to support as well in the community. So tail emissions could be like 0.5% a year. It could be something rather small. It's not going to be like a big inflation dilutive thing. It's just enough to create enough new coins so that everything keeps functioning and makes a credible argument that this thing can be sustainable. Because right now there isn't a clear sustainability. And
how would increasing the issuance of Bitcoin, if you could explain to the viewers, how would increasing the issuance of Bitcoin lead to a more sustainable network?
So, I mean, the way to conceptualize it is, you have security guards that you have to pay them to keep your property safe. So if you don't have any money to pay them with, then yeah, maybe they'll do it for a while because they just want to help you out. But at some point, like, they need to pay their families, right? Like, somebody has to pay all these energy costs. Somebody has to pay for all the equipment. So you need a budget. You need a way to pay them. And if block rewards are not paying them, because the way the halvening works, at some point it just goes to zero, then there's no security. So there's no network, and that's it. You're done.
Mm-hmm.
So you have to create like a wage, a sustainable wage, for like a minimum wage for the miners.
So in your opinion, I guess, given these concerns, taking them into account, do you prefer Ethereum, I guess, as a hold over Bitcoin? Are you an advocate of the flippening?
No, not really. Not an advocate on it. I do think it's going to happen temporarily, at least. It may not stick. I think it's likely that it will flip, and then we could see a reflip back down. Ethereum is great. I'm an advocate of Ethereum. I think it has a lot of use case as kind of like this decentralized like app network that people can build like more complicated apps on. I'm not one of the believers in ultrasound money. So
Okay.
that meme that it's a better version of Bitcoin, it's a better version of money, I think it just completely loses the game theory and the psychology and the philosophy of crypto. And I think it's very net negative to the space to think that Ethereum is like a different form of money. I think it's a great investment. It's a tech investment, and I'm supportive of it. And I think the tokenomics are great. There's going to be a supply squeeze at some point. It's inevitable.
Yeah, well, we can see the massive changes since the merge. I mean, just to kind of contextualize this, if the merge had never happened, $1 billion worth of ETH would have hit the market. Since the merge, only 1.4 million. So it's 1,000x decrease in issuance. So that's a pretty huge discrepancy. Is that something that's made you more kind of bullish on Ethereum going forward?
Yeah. So my thesis for both Bitcoin and Ethereum being good investments in the long run is the same. It's based on a supply squeeze. So at some point, as long as you can believe that in the future, these two assets will always have buyers, there will always be people that want to buy them, and like new money will keep coming in. It's not just a meme. Like, at some point you will run out of coins. And what that means is there's like an elastic supply. There's a lot of people who just don't want to sell. They don't want to sell at 1,500. So there's a saying, the marginal barrel prices the lot. So it's kind of for oil. In oil, you have barrels of oil. What's the price of oil in general? It's like, what's the marginal supply and demand? But that's just one barrel. And just because the price of oil right now is like, $70, because right now that's where the balance lies, it doesn't mean that if you look forward in the future, $70 is a good prediction of where it's going to be, as long as people keep buying. And with Ethereum and also Bitcoin, the issuance is very low. So there's going to be a supply squeeze where there's not enough coins, and we're going to see an explosive movement at some point.
So you don't mind Bitcoin and Ethereum as long-term holds for that reason?
I think they're incredible long-term holds. It's hard to see how good they are because like I said, we just look at the current price. We look at the marginal barrel. But there's so many people that will not be willing to sell at 2K or at 2,500 or at 3,000. And then we'll just keep going up because there won't be enough coins. So the marginal coin will start exponentially moving as soon as there is more liquidity in the system. So we have to wait for a liquidity cycle, but we'll see something explosive.
If you couldn't purchase any altcoins, let's just say the only thing you can buy is Bitcoin and Ethereum, and you had $10,000 to allocate between the two, what kind of weighting would you allocate?
So even though in general, I'm a bigger proponent of Bitcoin, right now, I think it makes sense maybe to do like 60-40 in Ethereum. And the reason being the merge happened during a bear market. And I don't think it's been fully priced in terms of the supply dynamic that's changed, because there hasn't been enough liquidity in the system to really create that dynamic. So right now, I would put a bit more on Ethereum until things rebalance.
Yep, that makes sense. So do you see Bitcoin dominance trending downwards over time, kind of as altcoins rise into the fray and obviously Ethereum gain strength, or do you kind of see dominance staying where it is or even increasing from a long-term perspective, let's say over 5 years?
Yeah, it could go both ways. I'm a little bit sad to see that the Bitcoin narrative is not doing great. I think it maybe needs like a new wave of thought leadership in the Bitcoin community. I think that the current like orthodox Bitcoiners that just kind of stick to the same talking points, everything else is a scam, only Bitcoin is real. And I actually understand the sentiment where it comes from, because I am a monetary maximalist. I don't think that society can organize itself in a way where we have a lot of decentralized monies. I do think that Bitcoin should be like the one. It's earned it based on being the first one and being kind of the invention and Satoshi's story. Yeah. And so I think monetarily it makes sense. It doesn't mean everything else is a scam, because there's a lot of other use cases. And there's a lot of ways that things can work together. Like you can create DeFi protocols that then can use Bitcoin. There's a lot of things you can do. But I think right now the narrative is a little bit dry. It hasn't performed well during the inflationary environment in 2021. And I think until the security model gets resolved, which is why I'm trying to kind of bring up this conversation, it's hard for a lot of really large players to buy Bitcoin, not knowing what's going to happen in the next 10 years. I think there's going to be a renaissance at some point, and there will be a new wave to Bitcoin, and I'll hopefully try to contribute to that. But right now, being realistic, and I'm always trying to be objective, it's not a period where I can see Bitcoin outperforming massively.
Interesting. So let's kind of pivot a little bit into the altcoin space now, because I know a lot of our viewers, obviously, big fans of altcoins, big fans of the layer ones. Kind of going off the Ethereum and Bitcoin conversation we just had, you said that the Bitcoin narrative is kind of stale. It's kind of dead at the moment. A lot of people are saying that the L1 rotation narrative, the L1 narrative is dead. Obviously, last cycle L1s were the top performers. We had Phantom going up by like a 10,000x, Solana, similar thing. We saw AVAX, money being rotated from that into Luna. It was really just madness. It was just a huge L1 frenzy because Ethereum gas fees were so high, right? What do you think of the L1 rotation narrative? Next cycle, are we going to see L1s perform as well as they did last cycle, or do you think that's kind of dead in the water?
It's mostly dead in the water. There might be new L1s that creates a new technology that allows new use cases, and those can do really well. But in terms of will the existing L1s 100x again or go back to their highs? I'm very skeptical. The L1 thesis was based around there's a scarcity of block space. So it was really like a block space thesis. It was there's so much demand for people to do things on chain, and Ethereum only has this much block space. So we need to create more chains and really expand. And there's a lack of block space, and block space is valuable. And you should buy these L1s because of that. That's no longer the case. I think the new thesis has to come from apps. So you should really be focusing more on applications, like new applications that will get users, because right now there's a lot of block space. There's no lack of it. There's so many L2s, and people sometimes don't even care about decentralization so much. So a lot of the block space might not be so decentralized, but you have a whole range of how much decentralization you want before you're comfortable using something.
But I guess one day, if more participants enter the crypto market, institutions as well, and we hit the kind of user projections and targets a lot of people are hoping for, could then there be a lack of block space potentially? If we get, let's say, another billion users into crypto, clearly the current infrastructure couldn't handle it, right? Are we kind of future prepping by investing in these L1s?
So it is a possible future, but for that future to happen, there first have to be really good apps, which is why I'm saying the first step is always going to come through the use cases and the application layer. And the fat application thesis is kind of the one that's on deck to get the next home run. Because now there's block space. So if a new app comes out, whether it's a game, whether it's DeFi, whether it's something completely new, then it's, sorry, just give me a second. My microphone went over the sorry.
Still sound good to me, but I don't know if it's.
No, it's okay now. It just mixed up.
What is the fat protocol thesis, by the way? That's something I wanted to ask. That's the thesis that the protocols, the dApps accrue more value than the layer one itself, right?
Exactly. So the fat protocol thesis goes away from the scarcity of block space. And once there is enough block space and we have all these options for L1s, we have all these options for L2s and L3s. And, there's so much ability to have transactions per second and do stuff. What starts to matter is the application. Does the application make users come in? And the applications can be quite differentiated. I know, there's smart contract code that can be open source and some of it can be replicated. But there's ways that the apps can potentially be unique and accrue value, whether it's through some of the code not being open source, or if it's trading, for example, liquidity begets liquidity. So once you get the liquidity and all the price discoveries happening there, that's also a moat that you can really keep, because it's very hard for people to go away from that liquidity. So the fat protocol, the fat application thesis, envisions a world where there's a lot of block space and the valuable thing is the ideas and the apps.
So do you think it's even worth taking that thesis into account? Do you think it's even worth investing in the layer ones themselves, or is it better to just allocate more heavily, a heavier percentage towards the dApps on that protocol? So if you were interested in the Solana ecosystem, for example, would you buy the Sol token, or would you look at some of the best dApps and allocate more heavily towards them?
I think it makes sense to go for the dApps. It is harder. There's more dApps than layer ones. Maybe there is 10, 20 layer ones, really. And there could be hundreds and thousands of apps. And it takes more work to track down and figure out which ones are getting traction. But if you find something like Steppen or, one of these things that can bring in retail, it's something fun. People can have it on their phone. It's going to end up getting a lot of block space usage, but it's so much better to find the protocol and bet on the protocol rather than buy Solana and hope that they go on Solana and they don't leave Solana, because we're also seeing projects migrate to other chains. So I think it's hard to bet on layer ones. It's a bit of a lazy trade at this point, given that you could do relative value trades. You can say I think Aptos is going to do better than Sui, so I'm going to go long one and short the other. But you have to be pretty informed to figure out which one.
So you wouldn't be betting on L1s directly. You wouldn't be buying AVAX or NIA or any of these layers. You're just more focusing on researching the dApps.
If there's a layer one that starts to differentiate itself, and it's not just another block space. If it's more than that, if it's like the community is really buying into the leadership or the business development, like Polygon's doing a great job. If you see like really good leadership and really good direction and business development, and you can think that layer one is going to differentiate itself through partnerships, then that's more bullish.
But then the layer one itself may not be accruing value from usage. It may just obviously be, like most of crypto, hype and speculation. Do you think that maybe and of course every layer one's different, maybe they don't do the most efficient job at capturing value, especially if like there's this race to get fees lower and lower and lower, then they're generating less revenue, right? So do you think that's like an issue from a value accrual perspective?
Yeah, the value accrual of layer ones is quite interesting. You have transaction fees as one source, which is a big source for something like Ethereum, but maybe not a big source for cheap. If you have a Avalanche or one of these like cheaper ones, they don't accrue as much fees. So then you start looking for other sources of monetary premium in a sense, and if there's like NFTs on that chain that are denominated in that currency and they start becoming very demanded, then maybe those can go up. Or if there's other things denominated in that price. Otherwise, if there's a lot of DeFi activity, then some of the MEV can accrue to the token somehow. So there's things to look at, but I would say I'm only interested in L1s that can really differentiate and make me feel like I can explain why this one specifically has an advantage. So we'll see, like there's new ones coming out. We'll see if the technology is like a step change. If it's like a 10x, 100x improvement on TPS, that'll be interesting.
Yeah, because some people have said like the move language, for example, that's a 10x improvement on Solidity and EVM. Do you kind of share that mindset? Obviously, we have Aptos already on the market. Sui launching next year. Are those chains that interest you?
I find them interesting because it's something new. It's a new language. It's designed for these type of applications. We'll have to see what happens. I'm not convinced necessarily that there's a step change yet. There's people I've spoken to founders who are building on these, and they like the move language a lot. But EVM has its issues. There's a lot of things better than EVM. It's a flawed language. Rust also has a lot of advantages over EVM and has a lot more mainstream developers building on Rust anyway. But Sui has a different version of Move than Aptos, and they think their version of Move is better than the Aptos version. So there's all these like incremental kind of better mousetrap improvements, and until I see something much more substantial, I'm not going to invest in these like new L1s yet.
I mean, yeah, I guess you kind of, unless you get in on the seed round, you could kind of try and farm an airdrop. I know people did pretty well off the Aptos airdrop. Maybe there'll be a Sui airdrop. That's kind of one way from a retail side, but it's also hard to invest in them when they first launch because of just the crazily inflated, fully diluted. Like Aptos, I think already hit like a 5 bill fully diluted. It's like the same as Solana, and it doesn't really have any apps on it. So I guess if you are a developer developing a new app, what chain would you build on? I mean, you could look to go cross-chain, obviously, or would you target a specific chain to launch on first? Is there any kind of chain that sparks your interest from a development standpoint?
I think right now the top two that make sense. It's a bit of a boring answer, but it would either be on like one of the L2s on Ethereum because you have that huge user base, and I don't know if it's
Arbitrum, Optimism.
Arbitrum right now. Obviously, like some of the ZK solutions are gonna appear. So if you're able to, be on the ZK side and be prepared for that next wave, then that's maybe best.
Yeah, what do you think of ZK? What's your opinion on it?
I mean, I think everybody knows it's the future. It's just a very complicated future to get there. So a lot of work being put in. If it starts running smoothly and things can get done without being, taking years to do a single project, at some point, the technology is quite superior to optimistic rollups. And
So just for the viewers, Arbitrum and Optimism are both optimistic. I think Polygon just announced they're working on a ZK EVM iteration as well.
yeah, Polygon's been in the ZK game for a while, and they're doing it through like acquisitions and acquiring teams. And I think that's a really smart thing to do. Kind of bring in expertise from elsewhere and try to use that. I think Atom is an interesting ecosystem. The Cosmos ecosystem is an interesting one to build upon. You can have a lot more control over your app chain, and you can still get security from other chains in that Cosmos ecosystem, and there's users there. So
what are some of your favorite dApps on Cosmos? Because that's a common, I guess, theme in crypto. A lot of people, they don't love the Atom token because of its reliance on like the Cosmos hub. Are there any apps on Cosmos that you're interested in to kind of get some exposure to that ecosystem?
Playing around with quite a few so far. I don't want to point out any specifically yet, because still kind of doing deeper dives and understanding the technology. I know that DYDX is actually launching their own Cosmos chain. They're moving their decentralized exchange there. So hopefully that goes well. I know they're doing a lot of development work on it right now, and I'm going to go into testnet. So definitely something we'll keep a very close eye on.
Yeah, I find the ecosystem interesting. You've also got like Injective as well, some of the other protocols that leverage Cosmos. So I think it's a good ecosystem in general. So to kind of round out the whole L1, L2 conversation, in 10 years' time, assuming crypto's still going strong, assuming we're on the right trajectory in terms of network growth, how do you see the landscape of L1s? Will it be Ethereum and L2 dominant, or there'll be kind of multiple other chains with their own defined niches? How do you view the space in 10 years?
Definitely Ethereum is going to have a decent chunk of the activity, and the L2s are going to be pretty active. There's going to be a lot of them. I think the Atom ecosystem will have a lot of interesting app chains kind of working together, and we'll have some new L1s that haven't even launched yet that will have better technology that will launch over like the next 5 years that will allow some new use cases with like much higher transaction throughput. There'll probably be like a multi-chain world where Ethereum is about half of it, and then maybe Cosmos is like a quarter of it, and then maybe you have some other L1s that allow for very niche specific use cases as well.
What do you think of like Polkadot? That's another interoperability play. Probably hasn't gained the same amount of traction as Cosmos, but is that something that interests you?
Polkadot's a very interesting one. It has a unique design, which has pluses and minuses. They found it hard to incentivize applications because you have to kind of go through this process of earning a slot, and you have to go through auctions, and you have to give a lot of tokens for doing that sometimes. It hasn't played out. There's people still very passionate about it. We'll see if they manage to turn it around. I think on the business development side, they've been a bit hamstrung. They haven't really created a lot of partnerships. I'm curious to see how it plays out, but so far it hasn't gotten traction, and it's been left behind.
Yeah, it kind of had a lot of buzz behind it. I remember like probably even 2020, just before the parachain auctions were supposed to come, and then they got delayed, and then kind of they took place at the end of the bull market. So it kind of was like the market was dipping whilst the auctions were going on. It was kind of like a weird scenario. So I guess it never really gained traction. So moving on to kind of a conversation about specific apps, something you've been very vocal about is kind of your opinions on DEXs, and obviously at Selini, that's something you're quite interested in. I was firstly interested in hearing your opinion on GMX and GNS, these Oracle-based exchanges, and what your thoughts are on them versus order book exchanges, and where you think the future of kind of DEXs will land. So yeah, firstly, what do you think of GMX, GNS, and yeah?
I mean, I have a mixed view. I generally don't want to talk too badly about them. I think they have a niche that they're potentially going to be able to sustain, but the future of decentralized exchanges does not look like this. doesn't look like an Oracle based, copycat sort of model. I would say that, and this is going to be controversial, but GMX and GNS are not even really DEXs. They're more like a casino, and I'll explain why I say that. When you're playing poker, there's this concept of like private games, and private games is like where you get all the fishy players and you put them aside, and the pros can't play there. So then the fish are more comfortable kind of playing, and they don't lose as much money. And if you can't do that, because like on a blockchain world, anybody can make a wallet and connect. So you can't really make a private game. The only thing you can do to keep the sharks away, the professionals away, is by having really high rake, like really high fees. Because if every pot that the professional is winning, if they have to pay 10% to the casino, then even if they're so much better than the other players, they don't want to play because they can't make any profit. And what's happening with these Oracle-based exchanges is their fees and their execution is so bad for retail users that it ends up keeping away like the sharks. And that's why you can potentially have the GLP token, which is like the market making token, be sustainable because the fees are so high and the professionals are being kept away. But as a retail user, you're paying over 10 bips just to execute a trade. And 10 bips is a lot, especially for like Bitcoin, Ethereum, where you can some other places get much cheaper, 2-3 bips, 4 bips max of fees. It's hard to make money trading back and forth with 10 bips. So I call it more of a it's sort of like a casino where it's for people to put like huge leverage on, take a punt, and that's fine. But it's not an exchange. An exchange is somewhere where like price discovery is happening because you have like a very fair and like low fee, low transaction environment where people can, seamlessly and without like a lot of friction, just agree on like what the current price is. And there's some new incident happens in the market. It's very bullish. The price has to go up. On things like GMX, you can't have that happen organically. They have to get it from an Oracle. And so they have to protect the protocol from getting blown up and getting bad debt. And so you get bad execution as a user because they'll slow down your transaction. They'll update the price. They'll give you worse usage and you'll get worse fees.
So can you explain to the viewers what's the difference between an Oracle-based exchange and other models like, for example, an Orderbook based exchange?
Yeah, so it's the same in many fields, like in sports betting, where you can bet against you can bet against William Hill or whatever like the bookie is, or you can bet against another user, like on Betfair, or like if it's your friend, you can just say like, is France going to win or is Argentina going to win? Let's bet at like $1,000. There's nobody like in between that. So if I bet against you and we have a different opinion, there's no fees, right? We'll just pay each other $1,000 depending on like, I'm a Messi supporter. You want to go with France. That's it. It's very like clean. If you're betting against like an Oracle or against like a third party, what's happening is like, they're giving you a price based on whatever the market is telling them, and they're telling you like, okay, well, we don't want to get picked off, so we're going to charge you like a fee on top of it. And this is the same in trading. This is the same like in other traditional finance as well. The difference is the price discovery happening, or is it an Oracle bringing the price discovery? And in the case of GMX, there's no human on the other side of it. It's the protocol. You're trading against the protocol. And so it sounds like it's similar, but it's completely different in terms of how it plays out.
So it's essentially what you're saying is it's like betting with a bookie, like a sports betting platform, versus betting against your friend, kind of. I guess also that's kind of maybe where they take their edge. Maybe the fees are slightly higher, kind of like similar to like a sports bet house edge.
Yeah, that's exactly right. The fees are higher because it's more like the house has to have an edge versus a like a player versus player betting where you can have much lower fees, and all you need is like a very small fee just for the platform as a technology fee, because the platform is not taking risk. the risk is being taken by the two sides. It's a much more sustainable model when two people are just taking risk against each other. And
But I guess if you look at the growth, right, of DEXs, this is a pretty new thing. Like this perp DEX trading, it's only recently in the past few months like exploded in both volume and obviously subsequently the prices have exploded. How deep down the rabbit hole can this grow before people come out to the realization that you've come to? Like, could GMX 50x in volume and still do a 10x before people realize, oh, maybe this isn't sustainable? Because maybe there is room for a sports betting platform in crypto.
There is room.
Does your thesis invalidate the price potential?
There is room. The reason there's room is because there's people who just want like a nice user interface and they just want to bet for fun and they don't care about paying 10 bips or 15 bips and getting like slightly worse execution. They're totally like, they're just betting. But professionals are not going to do that. So how much can you grow if you're not allowing professionals to get good execution? And most of the volume does happen from sophisticated traders who do want to optimize how much they pay on fees and execution. So I think it can't grow that much more. And the other thing is it's very easy to copy paste something like GMX because there's no liquidity. What we talked about before, liquidity begets liquidity. That doesn't apply to Oracle-based DEXs because you can just copy paste it, have the same price, and then you can just get the users. The only thing that you really is competitive is the community and the brand awareness, because then if somebody copy pastes it and makes another version, instead of blueberries, it's like raspberries, and it's not called GMX, it's called like SMX or something else. The only reason people would not move is just because they're more familiar with it and maybe they trust like the developers not to put bugs.
Like Olympus DAO or Tomb back in 2021 with those protocols exploding. We had all the forks, and then it almost gave more credibility to the original dApp, which I think is actually what's happening with GMX. You have a bunch of clones now launching and kind of copying their code. So I guess if it's not Oracle-based DEXs in the future, what are you looking at as the future of DEX trading? Are there any protocols that you like that you think are doing it right? How's kind of Selini approaching this as well?
Yeah, so just to quickly point out, like when you say perp DEXs, there are perp DEXs that are actual DEXs, like
Oracle-based perp DEX.
Yeah, so the other ones are like things like DYDX and perp. Those are like the two oldest ones that have been around for many years and have been building. DYDX is by far the largest in terms of volume. They have billions in volume there. So we are quite confident that the order book style DEX is the only thing that's sustainable in the future. And DYDX is a good one. They have a huge token unlock coming in January. So that's one reason why I'm not very bullish on their token right now. I want to see all these insiders and all these investors. You can see that January 23 is just exploding
huge
up.
Spike.
Huge spike. So I can't suggest anybody buy in December 22.
Do you think maybe people know that there's this spike coming, so it's kind of priced in?
In a bull market, like we've seen a lot of bullish unlocks. Like that was like this meme during the last bull market that it would actually pump through that price.
Yeah.
I don't know in a bear market, it's a little bit harder to know if there's going to be enough liquidity to pump through it or not. So I'm looking to buy it maybe at 125, 130. If it dips in January, I'll look to accumulate there. But I can't recommend it until we see how these unlocks play out. So DYDX right now is the only one really managing to have a lot of liquidity. You can really get great execution for a lot of volume on there. Part of it is that they're incentivizing market makers to quote liquidity using their own token. But that's very much like the real world. Like that's what CME and ICE and all these traditional exchanges do. They sometimes incentivize market makers to show liquidity because you need that for a good customer experience to get really tight quotes. But at the same time, I mentioned we have Selini Ventures, and we have been talking to all the DEXs that are in progress of building. There's maybe 20-25 Orderbook DEXs, and some of them are on Solana. Some of them have already launched. Like Drift. that they have like a new version. They're trying to like iterate and improve. Some of them are, building on Cosmos. Some they're building on L2s everywhere. We're talking to all of them, and some teams are really good. Some teams are maybe not going to be like the successful ones. We're getting deep into their code, and we want to support the ones that are going to build something sustainable. I think.
Do any stick out to you? Like, have you met with any and you've gone, okay, they're the real deal?
Yeah. There's 3 or 4 teams that we think are very strong. There's no tokens out yet. I mean, even like Drift, which the Drift team is really strong. They're really good, and they've been out for a while. But I don't think they released their token yet. We're gonna make some bets on the ones that we are confident in, and then we'll support them as well, because we'll help them kind of bootstrap the liquidity that they'll need to get off the ground. I think maybe like one on Solana, one on an L2, one on Cosmos. There'll be like 3 winners. I can imagine 3 or 4 like large winners.
Is there any that you can share today, or are you kind of?
Like I said, like most of the ones are still in progress. The ones that have tokens are like, Kujira. Some of the other ones have tokens, but we're still doing a bit of a deeper dive into the design and figuring out who's done it properly. But right now, I would say like Drift at least is one to keep an eye on, that they're doing a lot of things right. But
do you think it's definitely a future narrative that could be a strong performer, the Perpetual DEX order book narrative?
I think it's by far the most likely narrative. As a risk reward for like the next 2-3 years, there will very likely be some winners in that space that either don't exist or are just launching soon, or maybe launched recently. But if you think about what's like the lessons from FTX and also some of the other FUD around the other exchanges, is that people are no longer going to be just trusting centralized parties. They want to see the proof of reserves in a decentralized manner on chain, where their funds are like verifiable, and they know that they're not going to get rug pulled. And the only way to do that is with DeFi. Even Binance will say by themselves, the head of Binance and even CZ will say that it's very likely like their entire business model in 5-10 years is gone, and it's all decentralized. So of course they're investing in that future as well. And so I think that's already clear. Like we've seen maybe a 3x increase in decentralized volume in the last month or two since everything has gone down. And by the next bull market, I would expect that 10-20% of volume is already on DEXs.
I wanted to ask you, kind of on the DEX conversation, what do you think of DEX options platforms? So like DOPEX, Ribbon Finance, obviously they all kind of work a little bit differently, but I have a thesis that as the market matures, there's got to be a need for options trading, especially as like more institutional players come in. It's a great hedging and risk mitigation strategy to utilize options. Do you think that's also a narrative that could perform well? And what do you think of those type of protocols?
Yeah, we've seen some of that narrative with the vaults, like the options vaults, where people could get yield for giving up a little bit of the upside on their tokens, for example. And that seemed to take off. Things like Friction, some of the other Zeta, some of the other vaults, Ribbon obviously started this process. The main thing is like for proper volume, like I said, you need order books. So we'll need to see like order book options as being liquid enough to provide good execution. The problem with options is they can get illiquid. The spreads can get very wide, and you might not get a really good price as a user. So right now, most of the options volume is happening either OTC or it's happening on centralized exchange.
Right? Are there any projects you like? Like obviously, I'll just name a few. Like you've got DOPEX, Ribbon, Lyra, Hedgic, Buffer, JonesDAO, any of the options protocols that you think are doing a good job or could be an interesting look in the next year or so?
I think Ribbon is the one that I'm keeping the closest eye on, because first of all, they have shown that they're a really strong team. Like they're the ones who kind of brought options vaults and created these structured products. They really have already shown they can innovate. And with Avo now, like they're trying to do like an order book style. I think they have enough credibility in the space and enough partnerships that they might get liquidity from the large market makers and they could take off. So the ribbon approach is probably the one that is closest to having a real shot.
And what do you think of DOPEX? They're coming out with their options per trading platform. I'm not sure if it's Oracle based or not. I need to check that, but they're kind of doing some stuff there as well in Arbitrum.
So going back to like the Oracle versus like, order book style, I think the only real way to do this is to incentivize market makers. And unless they have partnerships with people who can really like kind of provide really thick and liquid markets, it's going to be very hard. And I can see only one winner emerging. So I would say I'm more on the ribbon side.
Okay, interesting. So that's obviously one narrative. We got the options narrative, and obviously you talked a lot about the DEX narrative as well. Looking into the future, what are kind of the other strong sectors that you're looking at as being categories that can outperform in the next cycle? Where are you kind of looking at placing your bets?
Yeah, I mean, it's more thinking about like what are the problems out there and who might solve them. So going everywhere from custody, how can you create a self-custody solution that people are very comfortable using, and for grandmothers and unsophisticated people where they can still have coins and not get hacked. So really good wallets, I think, especially if you have cross-chain wallets, that would be amazing. If you don't need to have a separate wallet for EVM and a separate one for Solana and a separate one for all the chains, just having a great multi-chain wallet that's maybe has like some social backup where you can still recover your keys in some way. That's interesting. Bridges was something that was overplayed, and I think a lot of them got hacked and a lot of them got into a lot of trouble. But eventually in the future, if we have this multi-chain world that I believe we will, then there will be some really good infrastructure for bridges. Like Layer 0 is one of the ones that stand out. So we're waiting to see.
Does Stargate interest you? That's obviously, they've got a lot of unlocks, kind of similar situation to DYDX, but as a platform, is that something that piques your interest?
Stargate is a great platform. I think the tokenomics are so-so. So I don't think that they've focused too much on accruing value to the Stargate token. I think when they eventually launch a Layer 0 token, they'll be more focused on getting transactions through that token. And that might be the better play. So I have a little bit of Stargate, but waiting to see how Layer 0 plays out and how that tokenomics is going to interfere with Stargate. Because Stargate is just one app on Layer 0.
I'm pretty interested in if there's a 0 token. I'm sure there will be one day. I mean, we don't know the tokenomics yet, as you said, but that's something that could be an interesting thing to bet on if it ends up being like, we need a lot more details basically before we can even talk about investing in it, but it's certainly interesting. What do you think about crypto gaming as well? That's another kind of topic. Obviously last cycle gaming exploded, like October, November. It was by far the biggest performer. Cooled off a lot since. In fact, it's been one of the weakest performers in the last 6 months. Do you think crypto gaming could ever come close to eclipsing traditional gaming or challenging traditional gaming?
I mean, I don't know about eclipsing, but I think we will have some winners in the space. It's about getting the formula right and making it sustainable. If somebody does a really fun game that people want to play for years and years, and it creates this like additional layer of like an economy around it that makes sense, and it's not being forced upon people. It's not like the whole point is to farm some coin. It just becomes like an additional layer where, you're playing Diablo and you pick up an item and now you can, sell it for some Ethereum and then you can do something else, whatever. That's fun. I'm a little bit hesitant to bet on a specific game until I actually see who is getting the formula right. So I'm personally not an expert in the space. I believe that there will be winners in the space, but I'm not sure who it's going to be.
Do you look at the studios maybe? I mean, like obviously you've got like Gala, UOS, PYR all making like multiple games. I guess the logic is if a studio's making 30 games, then it puts less pressure on you to pick an individual game. Is that maybe something you'd look at instead of trying to kind of pick the best one?
So on the venture side, I'm looking at potential more equity plays that are helping traditional studios, not like the galas, but like the traditional studios, try to consult for them and like bring them into like the Web3 world. I think the traditional studios have a lot of the talent. They just need to get slowly onboarded into Web3.
Do you think maybe we see a scenario where the actual gaming studios fail because it's the Web2 studios that end up going into Web3? Do you think like maybe none of these will perform and it'll just be studios from Web2 that migrate?
I think some will succeed, but some will fail. We see this with trading firms as well. Like a lot of the crypto native trading firms, they started getting squeezed out once like, the Citadels and all the traditional Web2 trading firms started getting in. But there's still some that survive, like, Wintermute. And you'll see that same dynamic where some crypto native will still like keep their niche in the gaming market, but a lot of it will probably come from, larger entities. And we'll see that as well with, firms like Google and Facebook and Microsoft. At some point, they'll start getting into some of the use cases and squeeze out some of the traditional crypto-only players.
So we've talked about the narratives that we think could be big in the future. We've talked about kind of some of our logic behind L1s and DEXs. I want to kind of look at the investor approach now. I've got two more topics to speak to you about. It's the investor approach, so how you would approach the market from a retail perspective, and also what your future outlook is on next year and the macro environment as well, because that obviously ties into how we approach the market as investors. So if you're an average retail investor and you have a portfolio, let's say, what is your ideal allocation towards Bitcoin, Ethereum, low caps, mid caps, and high caps? Like, how would you break down a retail portfolio? Obviously, in your opinion, not financial advice, of course. How do you think a retail portfolio should look from a risk profile perspective? And of course, there's many caveats depending on individuals' risk tolerances, but just like in general.
Yeah, if I was kind of like going at it from a retail's perspective, I would put half of it on, Bitcoin, Ethereum. Like I said, right now, probably 60-40 on Ethereum versus Bitcoin, given the stage of the cycle that we're in. But I would put half there. And then on the other half, I would look for, if you're retail and you're starting to get a vibe that there is like a new narrative, you're excited about some project, you can start to see it building up. If you're pretty plugged in, then it's totally fine to go pretty hard at this thesis of like, well, if I'm hearing about it and I'm seeing like there's traction, then as long as I'm not like the last one in the information cycle, if there's like a lot more low information people who are learning from TikTok or some platforms that are like the last ones to pick up on anything, then you can join some narratives and play it that way. There is a difference between investing and trading. So investing, if you're doing it for like 5-10 year horizon, you want to have like a nest egg in crypto, and you would believe that you should allocate some of your wealth to this asset class. Then just being careful with Bitcoin, Ethereum, and either DCAing or if you're more plugged in, maybe timing it a bit more. Like I would say, like Q2 is probably going to be a good time to buy once a lot of the macro FUD is improved. So it really depends where you are on the investing versus trading and on the spectrum there. I think having a balanced approach is best, because psychologically you're not blowing up too much, because Bitcoin and Ethereum are not going to go to zero, so you're not going to lose that, and then it lets you take a bit more risk further along the curve.
So I guess if you are plugged in, because I know a lot of our viewers are pretty plugged in, or they at least watch at least one show a week, maybe they've got a Twitter account, is kind of DCAing and closing your eyes and not flinching for multiple years the best approach? Or would you maybe think about kind of writing the narratives a bit more, chopping in and out of positions a bit more with like a percentage of your portfolio?
It's more like keeping some dry powder. So having just like fiat, having some dollars, USDC, whatever, around for opportunities that's maybe like the slightly more advanced version of DCAing, where you're saying like, yeah, I'm going to spread out money over time, but if there's a big dip, I want to be able to buy it. And that's sometimes where the best returns come in. Like if you look at 2008 crash, after 2008, like in 2009, you really had some crazy dips where there wasn't liquidity in the system. And I think we might get that next year, like in the first part of the year, in Q1, maybe like early Q2. So if you want to be a bit more advanced in DCA, keep some dry powder.
And I kind of want to ask you about your like future outlook then, while we're on the subject. Obviously, you're quite knowledgeable about macro. You said like you've learned a lot more over the past couple of years about macro too. I wanted to get your thoughts on the current situation, the current environment. How are you viewing it right now? And how do you think the Fed actually plays this out in 2023?
Yeah, it's funny because I've been trading fixed income like bonds and rates for over a decade now. And when I first got into crypto, it was like irrelevant. Nobody cares like what bonds are doing. It was like useless knowledge that I had. Like I might as well not have it. And then suddenly, like a few years later, it's at the core of the entire liquidity and what's going to happen with the ecosystem. So it's really relevant right now. Obviously, we've had a huge, like dramatic tightening of policy, and that's sucked the air out of all these bubbles that we've had, including crypto. And it's not quite done yet. So I have my pulse on it very closely. There's one leg still to come in early next year. So this is the time to invest in education, maybe getting in on some like big price dumps that can happen, and trying to get some really sweet deals on coins that you think are have a good team behind them. But ultimately, like the time that I am personally looking to go very long again and really start taking advantage of upside is around mid next year, when I think like.
And why do you think that is? Does that line up with like a macro thesis of yours?
Yeah, so there's still some rate increases to come. They're going to be increasing in February again. I expect it's going to be 25 bips, not 50. And then in March 22nd, I think another 25 bips, and that gets us right around 5%. And yeah, we probably stop there, but they'll keep it there for a while, and that's going until people like understand that this is a new paradigm, and the equity markets sell off, because equities are still not doing too badly.
Yeah, I was going to ask you that. Like,
sorry.
Considering, bless you, considering equities are like, they haven't really dropped. Historically speaking, it's been, I guess, a minor drop, given like the all-time highs to current levels, especially like maybe the Nasdaq's dropped harder, but the S&P. Do you think the stock market still has like significant room to come down? Are you expecting maybe Q1, Q2 next year that we do get that decline in equities?
Yeah, Miles, I mean, that's exactly what I'm expecting. I'm quite confident that there's another leg down, and it's around the time horizon.
20%, 30%, 40%.
No, I don't think anywhere that big. No. I think 15% is kind of what I'm expecting. I think we'll revisit these like 3,400 levels on the S&P. Maybe we break a bit lower depending on how things are looking. I don't think much worse than that. There's just too money that's already in the system. You can't take the genie out of the bottle and put it back in the bottle. Like they've printed so much money that's out there that ultimately, even though pre-COVID 3,000 S&P was like very high, and it looked like if you look at your chart right there, like before this huge dip, we were at like around in the 3,000 range.
3,400 pre-dip.
Yeah, so that was pretty inflated. Like that was overvalued. Like the P ratio was high at the time. But now, given how much money they've printed, I actually think that's a sustainable price. And I think we will find a lot of support around that price.
So if we take that level and map the current price down to that level, that's around basically exactly what you just said, 15.46%. So maybe that's kind of like a level we could expect to come down to as kind of like a base scenario.
Yeah, I think there'll be a lot of support there, and I don't really see it breaking much further from there. It's already going to be a great buy to buy like any risk assets once we get there, including crypto. So
yeah, I wanted to ask you that. How does crypto, obviously if the S&P comes down 15%, crypto takes a hit. The Nasdaq, as I'm showing here, that's an 18% drawdown to that level. Let's assume we go there. Given crypto has sold off like much harder than stocks, do you expect the crypto drawdown to be in line with the share market? Do you think it drops even harder? Do you think there's maybe a decoupling? How do you think crypto reacts to this this drop in the share market?
I think it's going to be in line, but in a percentage sense, which is like, like 15%. Again, I don't think that it's going to be this like high beta, multiply the percentage by 5, which is what we traditionally have, where, equities move up 2% and crypto moves up 10%, and then the other way around.
Yeah.
I do think a lot of the inflation in the crypto ecosystem is already out. It's out of the way. There's been so much liquidations happening that there's not much leverage in the system, and that will make it a bit more robust to the downside.
Okay. So, I mean, if we take the 15% case, that brings Bitcoin to around $15,000. It would bring Ethereum down to like $800-900 as well. I'm hearing a lot of people calling for 12K Bitcoin though. Is that like, do you think that's a possibility? That seems to be a number that resonates with a lot of people, at least on crypto Twitter.
Yeah, I think 12K, like we'll see 12K if something bad happens, like a really bad thing happens, like either Grayscale has to get cracked open and the piggy bank, has to get released, or if, there's Mt. Gox coins getting out. We don't know how many of them are going to be sold off right away. If there's a huge, like sudden increase in supply from one of these areas, then it's possible we'll get 12K. If we don't see anything dramatic, then we shouldn't get anywhere near there. With Ethereum, I don't think we get below 1,000. I think it's just such a round number that people who have dry powder are going to be looking for that 1,000 number to accumulate. So I think it doesn't really break 1,000.
I'm totally with you. Like whenever Ethereum hits $1,000, that's always when I buy. Like during FTX, I stacked. I haven't actually bought since, and pre-merge as well. When it hit 1,000, when it wicked down, that's when I bought. So like I have a very good dollar cost now around the $1,000 level. I'm hoping to continue that pattern of just stacking at 1,000. I mean, it could drop lower. It's a possibility if the share market pulls back. But I mean, you're right. The psychology behind $1,000 is pretty strong. So yeah, I guess we'll have to wait and see how that pans out. So
yeah, last time people bought 1,000, it just like flew up to 2,000, and they got a 2x return after a couple months, right? So people are going to be looking for that type of opportunity again.
That was actually crazy. That was like right around the merge. I mean, it hit 880 for a day. I think I got 950. That was my buy because that wick was like super quick. Then it went up like 104% post merge, and then obviously buy the rumor, sell the news. Then FTX, kind of we had that next leg down. I mean, from an Ethereum Bitcoin perspective, if you're longing the market now, so if you're a trader and you're looking to kind of long on these dips, do you? I mean, given Ethereum's relative strength, do you look more towards longing Ethereum and altcoins?
Ethereum, yes. Like I said, I think like the supply dynamic hasn't been fully priced in. I would expect like Ethereum's like fair price right now should be more like in the $1,800, $1,700 range, given where everything else is priced in traditional assets. And I just think it hasn't gotten reinflated yet. So I see a bit more upside there. I think Bitcoin can get explosive, but it'll happen suddenly, and it's not going to happen yet. So the way to think about Bitcoin is like, it's really like it's an alternative to fiat currencies. And there's one other alternative, which is gold. And gold is doing quite well. It's going to probably start doing better and better as well, because gold is like how these central banks play their game. Between all the central banks, they accumulate gold against each other, and they use that as like their alternative to each other's fiat. But on the retail side, gold doesn't make sense. It's not easy to store it and buy it, and you don't know what you're buying. It's really like a central bank game. So for retail, I think Bitcoin is the alternative to gold. It's like our as just normal people, it's our way out of the fiat world, and having a counterbalance and having like some insurance against that. And so that narrative hopefully can pick up and be explosive for Bitcoin, and that'll create a lot of wealth in the digital world again. Mm-hmm. But right now it's a bit muddied, and I don't see the narrative being quite there yet.
Zooming out, like long term, I think when people think about long-term Bitcoin price targets versus gold. People kind of expect one day Bitcoin kind of bridges the gap between its current levels and gold's current market cap, which I think is like 10 trillion or roughly like 15x now, was around 10x at Bitcoin's peak. Yeah, how do you view that gap? Do you think Bitcoin will bridge the gap between gold?
Yeah, I think Bitcoin will overtake and definitely like in the next 10 to 20 years. It's digital. I mean, it's just superior. There's no other way about it. Like, yeah, you can put some gold in a vault and then issue a token against it and then have that trade. And I know people have tried to do that, Paxos
Yeah.
gold and all this stuff. But at the end of the day, why even have this stuff in a vault when you can just cryptographically and mathematically ensure that there's a limited supply and it kind of follows certain rules. It's just better in every way, and I think over time it will pick up. But like I said, I do think gold has a position, and it's a position for central banks to play their intra central bank games that they play against each other. When one central bank is doing really well, like China's has a huge surplus, they'll buy a lot of gold, and then Russia will sell oil for gold, and then at some point they'll sell it off, and it kind of that's their game. But for the rest of us, I think we need something like Bitcoin.
So I wanted to go through a rapid fire to kind of wrap up the show prediction section. So what I want to do is ask you 5 questions at a slightly like faster pace, and you can give me your like, let's say, short form answer on it. So there's some controversial ones in here, and I'm sure there's some that the audience wanna hear about as well. So the first question is, does Solana get close to its all-time highs again?
No way. It's very unlikely. Maybe there was like a 2% chance, but it was such a huge bubble. I mean, we're miles away from it right now.
Do you think that Solana at these levels, or over the next 6 months, kind of lining up with your Q2 thesis, is going to be a decent buy potentially, given the fact it's kind of sold off a lot and has like a robust developer ecosystem?
Yeah, I think the main threat to Solana is like a new L1 that also uses the same approach, but does it maybe like in a better designed way. And then in that case, the main thing Solana has is the community. There is quite a strong community. The builders love it. They've gone down that rabbit hole. The NFT people have fun kind of using it as like their NFT trading platform. But I don't think that can explain the $100 billion FDV that it had, when it was $300.
Alameda can explain that probably. Well, they might have to in court.
Alameda, Multicoin, yeah, a lot of those.
It highly popped, and I mean that's the same for a lot of those other L1s as well, like AVAX as well, like heavily VC backed.
I mean, the reality is like it was a very artificial market. We can see that they were probably selling people's Bitcoin and Ethereum to buy Solana. Like users, actual Bitcoin was sold off and it doesn't exist anymore. And they were just kind of popping up Serum and Solana markets. So that's why I don't think that we can ever get to those kind of artificial levels again.
And then also there was those crazy stories of those brothers that had Sunny Aggregator and Saber, and they were stacking like fake liquidity on top of each other to like pump up the TVL, which obviously got people really hyped. And I mean, can you even create a set of circumstances again that creates such a violent upwards move like that? So many things lined up.
No, because the third thing is, which ties into what you just said, is the lack of education that existed at the time. Like things like TVL, we thought that, there should be like a ratio of TVL to like FDV for the chain. And we saw like you said, the TVL explode because these, the one developer who had 15 personalities and had 15 Twitter accounts, arguing with each other all day. He created 15 protocols that were just increasing the TVL by farming it into each other. And that's clearly like something that we've learned not to rely on. So,
Crazy.
Fool me once.
All right, next question. What will the total crypto market cap be in 2025?
2025, I think we're ready for the next bull run by then. We've had the Bitcoin halving. We've had like the liquidity back into the ecosystem. That's where I start to see us kind of reaching back the all-time highs, back towards the 3 trillion mark. So I would say by the end of 2025, I would expect that we're back towards like the 3 trillion mark.
Okay. If you had to guess, what price will Bitcoin bottom this cycle?
So either we've bottomed and nothing like really bad is going to happen, like one of these kind of like gray swan events. If we have another gray swan event, I can see like 11 to 12K.
Okay. This is a controversial one. This next one, I don't know. Some people might well, it depends what projects you hold or what you like. I personally don't believe in maximalism, but some people do. What are the most overvalued projects in crypto? What do you think is just trash, but's in the top 10 or 20 or 30?
Look, like I have to say, like things like Shiba Inu. I understand like there's some people who feel very strongly about dog coins. If I look at like Binance's reserves, and they have $60 billion, but then there's like billions of dollars of Shiba, or like crypto.com. You can look at the on-chain reserves, and they have more Shiba than Ethereum in their wallets. I understand there was a craze and people bought a lot of this stuff, but how can this like maybe like I'm like a boomer or something. I just can't see like some of these meme projects.
What do you think of Doge though? I kind of get the Shiba argument.
Yeah,
but Doge is maybe different with Twitter payments, or at least the hype behind it.
Doge is a little bit different. It's got the like OG meme coin status, and there could be like new meme coins that come up every year, and then Doge it'll be like the grandpa. It can still have some meme value, and if Twitter integrates it and other people take it seriously, then it's not. I'm not shorting Doge. I will not short it. I got burnt once. I shorted it at 1 cent. I woke up the next day and it was at 8.5 cents.
Oh my god!
Liquidated. I was having like a heart attack. I was
Caroline not liquidated. Ellison, no stop loss.
I had a stop loss. I almost got liquidated. I survived it. I lived to tell another day. I got out at 3 cents because it kind of retraced. I was just like looking at the chart and just retraced one time. And I got out at 3 cents, and then the next week it was at 20 cents, and then a month later it was at 84 cents. So I've learned not to short the power of the Doge meme.
I sold at 10 cents, and then it went to almost 80 cents something. So I was like, I was pretty pissed off.
Yeah, I mean, it's a terrible coin in the sense of it's still proof of work, and it has a huge inflation, and it's got a lot of problems like fundamentally with it.
Red flag.
Yes, but being that it's like the OG meme coin,
Elon Musk, Twitter payments may be accepting it alongside Mask, BNB, those kind of tokens.
Yeah, I think it's gonna pump again at some point, but
so maybe it's not the worst buy. Maybe when you look to buy, when the time's right to buy, then maybe Doge isn't a terrible buy.
Yeah, it'll have its moment again, I think.
So I'm gonna run through 8 projects now. I want you to give me one word to describe each of these projects. I mean, I know it's difficult because I'm gonna ask you Bitcoin first, and you'll probably want to say digital gold, but you can't because it's one word. All right, firstly, Bitcoin.
Coordination.
Solana.
Collectibles.
XRP.
Questionable.
Phantom.
Ooh, that's an interesting one. Experimental.
Okay, that's actually you found a good word in the end. Cardano.
Academic.
Wow, that's the perfect word. That's how Charles himself would describe it. BNB.
Community.
Litecoin.
Testnet.
Bitcoin Cash.
Failure.
That's a great way to... I was actually just about to end the show, but there was one question which I skipped over, which is probably the question I was most excited to ask you. So I have to ask it as the last question. It's kind of a can of worms, but we can keep it relatively quick. What is your opinion on technical analysis? What is your opinion on TA? Does it work? Does it not work?
So TA, like in a broader sense, has no reason to work. There is no fundamental reason that it should ever work. It's a humanly constructed approach, and the more people do it, the more there'll be winners and losers. And so some people will effectively like do it in a way that they predict resistance and support levels in a way that front runs the other people doing it. So there's like winners that can consistently win using it. But when you're trading against machines like we do in traditional markets, there's the concept of technicals. Like technicals are very powerful. Technicals in the sense of like, there are reasons that there are some people selling right now. There are structural flows, the end of month rebalancing, or, ETF has to rebalance itself. And then the algorithms will pick up these like technical setups, and they'll just do it in a machine learning way. They're not looking at lines and charts. The lines and charts is voodoo. The way that you know that, so the axis of time can be like seconds, it can be minutes, it can be hours, and in reality, like that's completely meaningless. Like the time aspect of charts can be changed, and then it makes the lines look completely differently in terms of what the degrees are, and like how sharp the lines are depending on what time horizon you use. And that's proof that it's just voodoo. What you should think about as an advanced trader is like event space and not time space, because everything happens in events, and there can be like months where nothing happens, and there can be like days where years happen. And so thinking about like in terms of events and volume, maybe you can do some really advanced TA where you do like a volume charts, and that's more meaningful. There's ways to clean up charts and make them useful, and I think charts have value for like visualization. But if you think that you're going to predict like these like wedges and like get the lines right, it's not sustainable. It's more just because, like I said, it's a bit of a PvP situation.
Do you think it can work for some people though? Because there are traders on Twitter that claim that, like, Cheds, for example, one of them, like Trader SC, Trader EXO, big traders on Twitter that are TA advocates. Clearly they're heavily in profits. Or at least that's kind of that's kind of the image they've got. Do you think these people kind of have developed an edge for themselves, or do you think it's more of a lucky streak? Like, what do you think overall?
It's not lucky streak. It's an edge, but it's not a real edge. It's, for example, if I say, think that there is like a resistance somewhere, and I say, oh guys, like I'm going to sell here. And then I publish on Twitter to like 200,000 people, and I say, guys, like I'm selling, and I always get it right. You have these like self-fulfilling prophecies sometimes. And better way to think about it is like, where are you on the information funnel? Are you at the beginning or at the end of the information funnel? And we've seen with like crypto specifically that, big accounts have been able to move the market. Like Hasaka tweets something, and especially during the bull market, there would be like a huge, like there's like algos, like, there's algos just waiting for them to tweet and looking at like what symbol they're tweeting and buying. So you can be a technical analysis trader and manage to make the market believe your read. But in the long run, when most of it's done algorithmically, it's going to be hard to manipulate the prices.
Do you think maybe because we're in crypto and it's a pretty nascent industry compared to stocks, do you think maybe the kind of AI and robotic infrastructure isn't really like there yet? So or the algorithms rather. Do you think maybe because it's nascent, there maybe still is a chance over the next few years to create an edge using TA?
Yeah, I think for the next couple of years, there's
so the hope's not dead for the day traders watching. It's not completely dead.
Yeah, and then we'll have to see like once all this AI stuff gets obviously we have the chatbots getting very advanced, and then we have like the image artist AI getting very advanced, and we'll have to see how like some of these tools interact with trading as well.
Yeah, it's going to be super interesting. Well, it's good to know there's a tiny bit of hope. Tiny bit of hope for the viewers out there that you can make your next $1 million trading. Well, and the thing with TA, I'll just add this. It's kind of, I think if you have a fundamental understanding of the market, you're in tune with the market, and you use TA as a tool to kind of underpin risk management, I think it's very good. if it's kind of like that additional tool. I think sometimes where traders fall short is they try and use TA as the sole basis for why they're executing a trade. It's kind of like this line's doing this, so it must do this, or the news must be coming because the chart looks like this. That's where I start to disagree. But I personally like TA as kind of like an addition to a thesis that I already have or a feeling that I have about a coin. Then I think it's useful. But that's just my two
Yeah,
cents.
I think like just to wrap up on TA, I think there's information in it. I actually the first Twitter thread I ever wrote that like blew up when I had like 100 followers and it got to like 1,000 was about specifically my thoughts on TA about 2 years ago. And the main gist is there's information there, there's value to be had, but you can get that value in other ways. You don't need to use TA. It's basically, you know, informing you as to like what other participants maybe are looking at for pricing to buy or sell, and where the risk reward kind of balances out. But there's better tools. I'll just say that there's value in it, but there's better tools.
Okay, cool. Well, I mean, we covered a lot. I think if anyone spent the full hour and a half watching this, I think it was one of the best hour and a half you could possibly spend of your time, especially with 2Speed. The adventure of 2Speed on YouTube's made things even more efficient. So I think like absolutely alpha packed show. I really appreciate you coming on. I'm gonna have to rewatch this and take some notes, get the notepad out because there was a lot of cool stuff to dig further. And I want to urge that as well to the viewers. If you heard anything that you found interesting in today's show and you thought, wow, that's a great point that Jordi made, look into it further, kind of use his maybe thought process, not as definitive, but as like a great starting point for you to do your own research, because there's some fantastic things we talked about with future of DEXs, kind of your macro opinions. I think it was super valuable. So thanks so much for joining.
Absolutely. No, I enjoyed it.
And obviously give him a follow as well. There'll be a link in the description to Jordi's Twitter. Give him a follow. He posts great alpha. Hopefully looking forward to some threads in the near future. I know you're a busy man, but maybe we'll be blessed with a few nice write-ups soon.
Yeah, over the holidays we'll have some time for sure.
For sure. All right. Thank you very much for joining. I will see everyone in the next one. Peace out, guys.